All right, so ES still just trading inside that 15-minute SIBI up here. Remember, we're inside this higher time frame 4-hour SIBI. So we could see this high taken and still see price move lower, but I'm interested to see how we develop inside the SIBI here. ES and NASDAQ have both run the 830 low. Mark those opening prices as well. 15, 30. Where do we got our midnight open? Midnight. There we go. Share in the members chat too. All right, so we're seeing ES work through the high end there. NASDAQ coming up to the consequent encroachment. Back above that 830 open. See what's going on a 5-minute here. All right, so we'll start to get an idea of order flow. Now that buy side has been run up here, do we see a new inefficiency created here on the 5-minute, or is this closed in? Okay, that's that coming back to that midnight open there. 4, 3, 2, 1. And we do have news at 9:45, so we'll see how that shapes up. Thanks to everyone who's taken some time to put a message in the introductions channel as well. Tag that here in the chat. We'd love to know where you all are from, how long you've been trading. Tell us a little bit about yourself. Great way for folks to start interacting inside the community here. So please do take some time today to leave a message in there. I'm going to go read those later myself. $9.30. All right, so we'll see if this will have some follow through from this 9:30 move, or if it's just a Judas swing to run buy side and then work lower. Going to be waiting for that 9:45 release, and probably wait till 10 a.m. as well. How's everyone feeling after yesterday? What was your FOMC experience? Too much volatility, glad I didn't push the button. Yeah, it's pretty wild, isn't it? Insane how one candle will move 20 handles. Yeah. No trade for me yesterday, just watched. Good. Yeah, that's the right way to be treating it. There's no need to really engage it. Mauricio says I went into the 10-second and one of those will move 10 handles in the NQ. Yeah, it's a pretty wild move. All right, ES still holding up a bit. NASDAQ coming back down below that midnight open. So this big gray box that we're inside is the weekly BISI. This here is a 1 hour SIBI that we've already traded above, right there. And then just note too that we have traded here into this BISI on the 1 hour. And have left the 15-minute SIBI here. So we'll see on NASDAQ if we can continue working into the sell side down here. But not too interested in anything yet. Just want to see where that 9:45 and 10 a.m. news takes things. Henry, do you use an indicator for 8:30 midnight open? No, I don't use indicators for anything. I prefer to mark it out myself. The only thing I have one for is the macros, just to show the macro windows. But I don't normally keep this on my charts. All right, NASDAQ working off the high end of that hourly SIBI again. So seeing that use as inversion so far. Note this little SIBI here on the 1 minute as well. And we've dropped back below the midnight open. Let's see if it's respected now to trade higher or if we get closure back below. So you can see how kind of in the first 30 minutes or so, if we've just been trading in consolidation, things can be a bit back and forth in terms of, all right, maybe we're looking toward the sell side, maybe we're looking toward the buy side. So all I'm doing is using this first 30 minutes to get an idea of where the order flow is going. So I'm using all these things that I'm talking about, like how are inefficiencies respected, where is price trading relative to our 8:30 and midnight opening prices. I'm looking at every single PD array, so I'm looking at our down close candles being respected, how far are we trading into wicks, our up close candles being respected. All of these things are hinting to me where the order flow is going this morning. And then we can get a better idea of things after the opening range develops in this first 30 minutes here. So far, we've seen buy side run out above here. Then we return into a discount down in here on that high end of the SIBI. Looks like we'll be working back up toward the buy side now. We do have relative equal highs up here, so expecting that to be purged. ES is continuing to work higher. We'll see if NASDAQ can now make a run above these highs. Keep in mind it is still trading inside that 15-minute SIBI, so we'll see if price can work lower from here. The only thing is that this is out of context for me at this point, because if we're looking at the context of it, you have the low that was formed before price traded into the SIBI right here, and now that has already been purged in the form of sell-side liquidity below this low. And so I'm not looking at a return into this SIBI the same way that I view an initial return into it. Yes, working the high end of that 15-minute SIBI. Right there, tapping that volume imbalance. And it did create a 5-minute inefficiency down here, so be aware of that. All right, here's the 9:45 news. Yes, still holding up pretty well here at the moment. See if we want to reach into the high end of this volume imbalance. There we go. And we got buy side above here if it is going to continue higher. Nasdaq's just been in consolidation since the open at 9:30 here. Hasn't really moved much. So just waiting to see, do we make a run on the buy side above these relative equal highs, or work back off the 15-minute SIBI back down toward the lows. Not much to see really at this point. And there's no need to be taking a trade inside something like this either. If you look at this on like a 5-minute chart, where are you finding your trade within this? All right, we'll see if ES is going to revisit this inefficiency here now. On that 5-minute. Take a look at dollar quickly too. Okay, dollar's still coming off into a deeper discount so far. Look at the hourly. So we got sell side below this low. If dollars are going to keep dropping lower, we could see indices make a run a bit higher into the range. But we are seeing those mixed market conditions too, so the weight of the dollar isn't necessarily having a huge influence on what we're seeing in the indices. We'll just mark out this low, being sell side on the dollar. See if we can get the trade through there. We're inside this 15-minute BISI as well here. Take a look at this range. Low to high. So it can come back into a discount from a premium, below equilibrium, below sell side liquidity. We'll see if dollar will continue to work there. All right, ES reaching back into that 5-minute BISI, which we can see right there. And Nasdaq coming back into the 1-hour CB, high in there. Still just getting a feel for things, waiting for that 10 a.m. news release. And remember, it's NFP week. The best trading opportunities will be up until that AM session on Wednesday. So given that we're now on the day just prior to NFP, we may not see the highest probability conditions here. And there's no need to be putting on any risk. Second, just sending a message here. Okay, ES coming back up into this little SIBI right there. Off the 5-minute. We're still inside this 15-minute inefficiency. Candle bodies holding nicely at the high end. We did have this slight trade just over the high end to trade up into that volume imbalance. But now we see the next candle coming off nicely. The biggest thing to keep your eye on is the fact that price is trading into a 4-hour SIBI. So you can see a whole lot of consolidation, back and forth movement inside of here. But the framework for the trade, until we get an idea of price getting closure above the consequent encroachment up here, and even up to the high end, is that price is more primed to move lower out of this inefficiency. We are coming from a higher time frame inefficiency being the weekly, so we have to wait and see in this 4 hour, do we get new displacement off of it or do we cut right through it? Right? And this 4 hour candle is going to close here in 5 minutes at 10. And then the 10 a.m. 4 hour candle should give us a better idea for where we'll see the daily expansion. Same idea with NASDAQ, trading up into the order block there. See if we can work lower off of that. So you can see we've got our premium arrays and our discount arrays. And so far just consolidation moving back between a premium and a discount over and over. If you're a scalper and you go to really small time frames, like if we go to sub 1 minute time frames, you can find opportunities within here, right? Like here you see a run on sell side, shift in market structure, return to a fair value gap. You can buy this for a run up to the premium array. But these aren't really sustained price runs that it's necessarily worth putting risk on. But these are opportunities for high frequency traders and high frequency algorithms to participate inside moves that just appear as consolidation on higher time frames. Carson says he's short on his paper account on the 9, 10, 9, 11 camp. 9, 10. Okay. Using this as a breaker, I'm assuming. Stop currently 17,340 and a half. Yep, so right above the buy side right there. First partial to 86. Terminus 17,230 and a half. Yep, so terminus being before the lows down here. Okay, nice move so far down into the sell side. So we're starting to see that move out of the 4 hour. Okay, so if you're a higher time frame trader, the initial trade opportunity was we saw a price move up into the 4 hour order block, or did we see it on the 1 hour, excuse me? Yeah, the 1 hour. You can see it on the 4 too, but the 1 hour here, right there, gets new displacement off of it here on the 15 minute. You can see this as your 2022 model too. So buy side is being run above the highs into a higher time frame PD array, shift in market structure below this low right here, and then a return back into the inefficiency. You can take your entry here, stop loss above the high, wicks do the damage, but the bodies tell you the story here, closing right around the consequent encroachment. And then you can see how that continues to drop off, and you could be targeting this low here and this low down here. Carson says first partial tag, stop to break even. Just mark our sell side liquidity here so we can see sell side there and below here. Yes, still seeing the bodies closing inside that 5-minute BTC so far. See where this candle closes. About 15 seconds left. There's the 10 a.m. news. All right, see NASDAQ continuing to sell side here. Let's take a look at the dollar. So sell side was run out like we expected here on the dollar. And now we're seeing a return up into the range. So let's go back to our higher time frames and see what we got here. Nothing on the 4-hour yet. 1 hour. Okay. Nothing in there. 30-minute. Right. So not a whole lot of inefficiency here, but just revisiting that BTC here. And we'll see if it's used as inversion to trade lower, or if we get back above and close above it and then work up to the equal highs up here. NASDAQ looks like it's doing a bit of crouching before making the final run to sell side. But you can see here it just traded just past the hourly SIBI low. Right there. And back into the new day opening gap right here. Just down into the rejection block here as well on the hourly. Still expecting sell side to be purged at the moment though. Not creating much in the way of new inefficiencies on the way lower. Neither is ES. All right. Still respecting that last down close candle so far here on ES after trading out of the weekly BISI. Right there. Very seek and destroy morning so far, as you can see, which is typical of the days leading up to NFP. Sell side being run here, buy side being run here, sell side being run out again. As you can see, it's not prime conditions to be engaging. All right, using that low end here on the hourly, and Nasdaq's finding its way back up into the range here. We'll see if a new inefficiency gets created here. 40 seconds left. Working back up into a premium of the dealing range, back toward that midnight open. ES has these relative equal highs up here. Look interesting to me. Sell side's been run already. We've seen seek and destroy all day long. So we can look for those turtle soup opportunities where sell side's purge right here. Shifting again. And now we'll see if we can get an inefficiency here and then see it used to trade higher up into the buy side. Note we're seeing these candle bodies close still. Trading way down, running out the sell side, but look at the bodies. Right inside that 5-minute inefficiency. Okay. So that's 5-minute there. We're getting a new inefficiency here. Let's see if this is used to trade price from here up toward the buy side up here. Okay, so we had the swing below the midnight open, below sell side, can allow more accumulation there. So an opportunity like this could be like that with stop below here. And looking for the buy side of these highs. Again, probabilities are not in our favor today with these conditions. It's the day before NFP. All right, starting to work in our favor here. Let's see what we could look at for higher targets if we're going to reach beyond that. So I'll go back to the 4-hour. So on this, I'd probably just look for the high end of the 4-hour SIBI. So we could extend this a little bit. Look for up here, but still be taking that partial at the buy side above these highs. So that first partial will be about roughly 7 handles or so. You see how the framework for this kind of shaped up? You can see we have a seek and destroy day. We already traded out of the higher time frame inefficiency, which helps us maintain that long bias even when we're trading into an inefficiency above. We're always working off the highest time frame inefficiency, and so we have to be conscious of that if we're looking at price to trade lower from a inefficiency that's lower than the one that we already traded into. Does that make sense? So we already traded into a weekly. A 4-hour could move price lower if we're going to dig deeper into the weekly, but we have to be aware of the fact that the weekly can be pushing price higher. And so we're waiting, we're seeing what the conditions are this morning. It's before NFP. We have seek and destroy conditions so far in the morning. Since 9:30, we've run sell side, we've run buy side, we've run sell side. So we're looking for opportunities to catch a turtle soup sort of entry and just participate in a reversal to the opposite end of the range. So there you go. That'd be your first partial right there. So we had the sell side run here. NASDAQ is reaching into the low of the hourly SIBI and failing to reach to the sell side. It's not showing a willingness to continue lower. ES is holding up as well. We're not seeing any new inefficiencies being created as price trades lower. And when we look at the 5-minute, we saw this BISI here. Yes, price dropped lower into the sell side. That's fine. Look where the candle bodies close. Right inside the inefficiency. Sell side's run. This is your 2022 model. Purging liquidity, shift in market structure above this high right there. Price drops back into the inefficiency. There's another one here, so you need to allow both of them to trade. That's why stop loss goes under this candle body's low, allowing this inefficiency to trade. But we enter in this one because we're not guaranteed this entry. So we enter here, stop loss here, and we target the highs. First partial would be taken right there, and we leave a runner for up here. At this point, I'd move my stop to just below this down close candle here. Can you point to the shift in market structure again? Yeah, so it'll be right above this candle's high right there, right here. See that? So this is your 2022 model. You purge the low down here, price running through that, then trading up through the swing point right here. That's your shift in market structure, and then return into the fair value gap right here, being this candle's high to this candle's low, that inefficiency. And you're seeing the 5-minute fair value gap from before being utilized again, right there. Okay, so not bad for an NFP day before NFP morning. You can still find little opportunities within it. At this point, we'd be partialed out of the trade, probably about 70–80% off already, and then stop here, just below break even. Thanks, Arish. Bob says that was the 950 to 1010 macro as well. Yeah, exactly. So 10 a.m. manipulation on the news. It manipulates lower, runs out the sell side. Look at the midnight open as well. So if we're looking at if that is the daily opening, we're manipulating below the daily open. So if you're thinking about it as a single candle on the daily chart, just like you think about a 1-minute candle, you have the open, the manipulation being the wick below, which is like what we're seeing below the midnight open right here. And then you trade back through the opening price like you would on this candle, and you get your distribution, which is what we see right there. What's the indicator for the macros? Is there a way for me to share it? I'm not sure how to share it. Copy link. That's the only link I could find. I don't know if it lets you access the indicator or not. I turned it on when he first released it, so I think it still lets me use it, but you can see if it'll let you as well. But you don't need an indicator for it. For the most part, it's just each hour, the last 10 minutes of the hour, and the first 10 minutes of the next. So 8:50 to 9:10, 9:50 to 10:10, 10:50 to 11:10, so on. All right. So if we look on a 5-minute now, you can see this is your bullish breaker here. So we're not jamming our stop loss all the way up in here. If we're going to see a broader range on this trade, we want to allow for price to return into that range because our initial context has been purged at this point. Right? So if we're entering here, we're looking for this high to be traded, and we're looking for that speedy price run up to the highs right here. Now that buy side has been traded, we have to allow for price to return into the range. So I can't jam my stop loss all the way up in here to try and protect the profits. If you want to do that, you might as well just take the entire trade off at the buy side. Instead, we take about 70 to 80% off and just trail that stop loss up to just below our 3 PD arrays. So we'll have the inefficiency here, here, and the overlapping high here in these two down close candles. So I'm okay with the stop loss being there. And when this high is run here, I'll go break even on the stop. You can see NASDAQ now using that 15-minute SIBI from before as inversion. See that can continue to trade up through the buy side here as well. And then work toward this level here, which is the mean threshold of that hourly bearish order block. Right, so just waiting for this to go one tick higher above these highs. Until that's done, stop does not move. You can see the 15-minute here being used as inversion as well. If we look to that 15-minute chart. So here's that SIBI utilized right here. As soon as this low is traded, it's out of context for me now. We see sell side purge again here. You kind of get your 3 drives pattern there back into a discount of this dealing range. So low to high, equilibrium in here. We're trading in a discount, running sell side liquidity again, 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 and then moving higher. And then you can see price return into the 15-minute on the high end right here and utilize it to trade higher, which is what we see right there. And still just waiting for this high to be run out. Clear up some of this stuff for a bit more clarity on the charts. Aiden says, what is the 3 drives pattern I've seen? Okay, yeah, 3 drives pattern is pretty much just when price is working into an array where you'd expect it to make a move from, and you see the sell side or the buy side make 3 drives down like this. So if we're expecting that price can move higher, we're seeing 1 drive down. It's running through sell side liquidity right here. Another drive down right there. Another drive down right there. And what it means essentially is that price does not have to come all the way to the external sell side liquidity here before making the reversal, because each time it's driving down and then retracing, more liquidity is being built up under the lows. And so people are buying this and then putting a sell stop under the low. So more liquidity is under this low. Smart money can accumulate here and here each time the low is run out, and then long positions can be offset above the highs. And it works the same way for a buy side too if you're looking for a shorting opportunity. The important thing is your context in the draw on liquidity though, because not every time you see price run lower 3 times is it going to result in a reversal. It has to occur within an area that you would expect price to run higher from. All right, so we got a 5-minute inefficiency here on ES. Also have the 5-minute breaker right there. So your low, high, lower low, this up close candle right here, still allowing price to trade inside that and inside the inefficiency right here. Stop is still below this candle's low on the 5-minute. Trading into the lower inefficiency here. Totally permissible. All right, coming into that overlapping high there, right there. Okay, so that would be the rest of the trade. So remember, we're taking 70 to 80% off at our first partial up here. So you had the 7.5 handles there. And then we trail the stop loss up to 1 handle. So on that 20% of the position left, take the 1 handle there. And then on the rest of the position, you're in profit on that partial. So there we go. And it's up to you on the management. If you would have preferred to go break even after the partial, that's fine as well. This is just where I would have left the stop on that. But there we go. Does everyone understand the framework for that trade? How it developed there? Aiden, Kate, Bob, Sarah, good. Okay. Arish, yes. Okay, good. All right. And you can see the conditions continue, right? Seek and destroy. That's why instead of holding, whereas if we're working in conditions that we don't expect the seek and destroy and we can have higher price targets, we can take off a smaller partial here, like 30 or 40% of the position, and hold a more significant amount for higher targets. But since we're seeing these conditions of sell side being run, buy side being run, sell side being run, buy side being run, there's no reason to expect it to stop all of the sudden. And so we're anticipating that we could see a deeper return back into the range, and that's why the partial we're taking up here is 70 to 80% of the position instead of 30 to 40%. So we're paid very nicely on the first partial, and it's totally fine if the rest of the position stops out. And if it's your preference in management, this is plenty large enough of a run to have a very nice trading day, and it's totally fine to take your one entry there, take your one exit there, and just be done with the trade. Just depends on your own style of management. Do you like to hold for more? Are you willing to sit with the trade longer? And that is all independent, up to your journey. All right. And now we did leave the relative equal highs up here, just coming back into a discount of this price range. So where NASDAQ's sitting right now, I'd be curious to see if we can see these highs run again. But at this point, you have to be aware of the fact that buy side's been run. We're trading back into the range. We can see the opposite side of the range trade right here. So I wouldn't be interested in anything at this point. Just note these inefficiencies here. Let's see what dollar's doing. All right, so we had that nice inversion there of the 4 hour, which we saw right here. 4 hour busy. Price trades through it, comes back to revisit it right there. And we're going to see it likely dig off back into a deeper sell side. Okay, so let's see now if that can work back down into, I'd look next for midpoint of this wick here. Take that off. So we'll look for that 103.413 level next. All right, there goes NASDAQ. So we'll likely see another high here on NASDAQ and ES as well through these relative equal highs. I forget the name, but could there have been an entry long on ES on the retracement where you use the fib? Yeah, that's the optimal trade entry. If you do something like that, you can put on your OTE. So it didn't quite get to the OTE, but it did return into a discount. So you can be a buyer inside of a discount. And you'll see too, if you're looking at this on a 5-minute basis, note where the candle bodies close again. So if you were trading this off of a 5-minute chart alone, I would have the stop loss on the trade below the consequent encroachment of this wick, and then you'd be looking for higher prices. So this, if you were trading this on a 5-minute basis, the trade could still be in, right? Because we're looking at this on a consequent encroachment here, so stop will be below the midpoint, right about in there. And then you can look to target the highs up here. and you're taking that trade inside the 5-minute busy right here. See how the body's closed inside it? Same thing with NASDAQ here, dropping down into the 5-minute. Stop needs to be below this low. Since we have the down close candle with it here too, I'd put the stop below the body right here. So NASDAQ could be traded like this. And we'll look for that mean threshold up here. Is the 2-minute the best time frame to consider, or the 5-minute? Just training my eye. So what you're going to need to do is rotate through the time frames, because you need to see at all times what inefficiencies are being created, and you can work through from the highest down to the lowest. So you could start with a 15-minute and see, okay, well, we're starting to get the framework for a trade here. We traded through the sell side, we hit the last down close candle right here, we're running back up into the range. I don't see any new inefficiencies here on the 15-minute, so I can drop to a 5-minute chart from there, and we see an inefficiency right here. So we can say, all right, if price is going to work higher from here, we can be a buyer in that inefficiency. Stop needs to be below the consequent encroachment of this wick, because price can wick deeper than the 5-minute inefficiency right here. And as long as the bodies are closing inside, we can see a continued price run higher. And if you didn't see anything on the 5-minute, you'd drop to the 4-minute, which you see one right there. If you didn't see anything on the 4, you go to the 3, and then the 2, and then the 1. And that's the way you can work yourself down. So for this initial trade that we took right there, there wasn't any inefficiency yet on the 5, the 4, the 3, the 2. So I went to the 1-minute. And that's where we see the inefficiency. And so I build the trade off of that. But then the context is reached up here, so I need to drop back to my 15-minute and see, are there any new inefficiencies? No, there's not. So I can go to the 5-minute, and then I see there is a new inefficiency. And so if I was looking for another opportunity, I could take it here off the 5-minute within this framework. If it's not as clear to you on the 5, then you can see where the structure looks clearer to you. So if you go down to a 4, to a 3, that may look a little bit clearer, right? If you go to a 2-minute, and you can see it's returning into these inefficiencies. The last down close candle, the order block right here, hits it perfectly, runs back up into the highs. Do you want to see the move happen during the macros? Not every single price run is going to occur within the macros, but a lot of times we will see a run in that time frame. That's where you see a lot of the more energetic and sustained price runs, or at least see them kind of initiated. Sarah says, I can kind of start to see it in the 4-minute, but it's glaring at me in the 2-minute. Yeah, so you just work your way, cycle through the time frames. You just want to make sure you're aware when you're cycling through that you're aware of the highest time frame inefficiencies. So we see one on the 5, you need to be aware that that is there. Then you can drop to a 4 from there, and we see inefficiency right here. So you need to account for that, allowing that whole area to trade, which means your stop loss can't be right here because that whole inefficiency can trade. And that's why we're putting the stop loss below consequent encroachment of the wick, because it can trade all of that. It can wick past it into the wick, but it shouldn't go any lower than the consequent encroachment. You can go to a 3-minute from there. See there's a small inefficiency in there still between this candle's high and this candle's low, right in there. So allowing that to trade. 2-minute, same thing. This candle's high, this candle's low, right there. Got to allow that to trade. So stop can be down here. And we see that run back up into the equal highs. All right, we'll go ahead and we'll see if the rest of that trade would play out. We had it down here from consequent encroachment, targeting the high up here, and still watching this one on NASDAQ to trade to the mean threshold up here. But of course, you'd be taking your partials again, right? So at least paying yourself on the run back through the highs up here, taking a partial here on NASDAQ. You can move your stop loss up to that low at this point, like that. Any questions, y'all? Mauricio, I see your hand. What's up? You're muted, Mauricio. Sarah says, when would the entry idea have occurred for the OTE on the 2-minute? It didn't reach all the way to the OTE, so you wouldn't have had an entry with that model. When would the ideal entry? Yeah, you wouldn't have had the OTE entry, but you do get, if you're trading this on a 2-minute, remember you have to allow for all of the inefficiency to trade. So even if you were to enter up here, your stop loss would still have to account for this inefficiency and this inefficiency. That's why you got to think about how far you could potentially see this trade reaching and see where it makes sense for you to take the trade. Because if you could only see it going back up to this high, I wouldn't take a trade like that to get this high if my expectation was that I was going to have to risk all the way below this low and put my stop down here, because it's not really favorable to me anymore. Risk reward isn't too important, because if you have just a 1-to-1 risk reward, which is totally fine, like something like that, you can be ultra profitable with that as long as you're able to win more than half of your trades, right? So risk reward isn't so important, but I do factor it in a sense with my expectations for how far price could reach. So if I only thought that price could reach up to this high, I'd probably wait until price returns at least into a discount of the range for me to be entering. So I'll take my fib and put it on that low to that high. And let me just move this a second. And we get a discount being right here at equilibrium. So we're already inside these inefficiencies. I could enter that trade right here at equilibrium, put my stop loss under that low, and target above these highs, and then up to here. Does that make sense? See you, Carson. Thanks for joining. Oh, I think you dipped. Yeah, go ahead, Mauricio. Mm-hmm. No, this is a different scenario than that. The reason that I would have mitigated part of the position yesterday when we weren't seeing the run is because of the conditions that we were trading in. So I talked about it being within the macro, but even more so the fact that it didn't run within the macro was that let me see if I can even go back and look at yesterday's price action, because that would help taking a look at this. Okay. So this was the run that we looked at yesterday. Right here. That's 1010 where the run began, right? But what we're seeing in here is we're seeing the inefficiency being traded in here, right? And then we've got a little short-term low in here. Price is moving back through that and then closing back up inside the inefficiency as well. And at the same time, we had already seen ES make a move lower. And so we were waiting at this point to see if we would hold this SMT that we had. And with how it was developing there, I wanted to see the price run happen already. And since it was just hanging around in this inefficiency for so long, just waiting, it didn't make sense for me at that point to hold the entire trade anymore. So that's why I mitigated half and then let the rest of it run. The trade that we're looking at here we would have entered inside of this window here between, let's see, entry would have come here on this candle at 1020. Stop was originally below here and now trailed up to here. At this point, we would have taken a partial above the buy side. So take at least 50% off there given today's conditions, if not more, if not that 70 to 80%. And I'll just leave the stop where it is now until we see a new high, and then I'll go to break even on it. All right, so at this point, all these trades should be paid with partials. And so no matter what happens at this point, if it returns to break even or hits the stop or however it plays out, is totally fine. And we're not in a high probability day, given that we have NFP tomorrow. So remember yesterday when we talked about setting expectations in terms of your trade management, you have to manage differently on a day like this. Expect shorter price runs, not a sustained move. And that's why we're looking to take our partials earlier and a greater portion of the trade off in that first partial as well. Does that make sense to everyone? Sweet. Check out the dollar here. All right, so there we go, working down into the consequent encroachment of the wick. We'll see if it can dig a bit deeper into there. Back below this low here. Okay, so again, not jamming the stop loss up. So we're allowing new inefficiencies to trade. Look here, no new inefficiency on the 15 minute, so we're cool where the stop is at. Go to the 5. This can be revisited, but if it is, I wouldn't expect it to revisit it, trade all the way back below the low, and then continue higher. So stop loss is fine below the low at this point. We've already taken a partial and paid ourselves on the trade. So if the stop is reached at this point on the last 20% of the trade, that is fine. Same deal with ES. Ari says 100% makes sense. We can't expect bigger moves on days like this. Yeah. And that's the case a lot of times ahead of high impact news, because the days leading up to high impact news are just generating liquidity on both sides of the market so that you can see something like what we saw yesterday with FOMC, where buy side is run out and then you get that reversal and run back down toward the sell side. Sarah says, when you say allowing new inefficiencies to trade, you mean on the low time frame you enter or also on the larger ones, like if they develop on the 5 or 15 minute also? I'm referring to all of them, and the way that I work through it is I'll start with the highest time frame, so like a 15 minute here, then we go to the 5 minute. This was our trade here on the 5 minute, and I'm going to remove this 15 minute here, get rid of that one as well, just so I can clear things up a bit. So this was the original trade idea, 5 minute, stop below here, with this being the context high. So if I'm looking at this as the inefficiency, what high formed before price traded into it? It's this high right here. So as soon as that high trades, I'm going to look back within this range and see if a new inefficiency is formed. So I'm going to go back to my higher time frame first. You could go as far as like a 1 hour chart, but there's no inefficiency here on a 1 hour chart. I'll go to a 15. No inefficiency here, apart from the wicks being viewed as inefficiency, but you don't see any new fair value gap. So I'll go back to 5. That's the one that we traded from. You see a new one has been formed here. Move this out of the way. A new one's been formed there, so you need to allow for that to trade. Go to a 4 minute. In here. 3. 2. So price could trade all the way down into here. And your 1 minute. There's a small inefficiency there. But we're managing the stop loss based on the higher time frame. Right? So we entered off the 5 minute with the stop loss originally down here. After we've taken our partial, we can cover at this low because our expectation is we've already fully redelivered into this whole inefficiency right here, and we've traded away from it, rebalancing it. So if price trades back into this inefficiency here, I wouldn't want to see it trade any lower on a closing basis than the consequent encroachment of it, the midpoint of this inefficiency. And so my stop should be safe under this low. And if it's stopped out, that's fine because we already took the partial. Mauricio, if this 5 minute fair value gap closed under mean threshold, would not you be concerned? Are you talking about price closing below consequent encroachment of this? Of this inefficiency here? It's an indication that price can trade lower, but the way that I'd be managing this trade is, since we have these seek and destroy conditions, I'm managing the stop a little bit more loosely and allowing for more of that wicks doing the damage kind of action to be done. And so if this trades all the way down into there, that's totally fine. It can trade into the last down closed candle. It can trade as far as the midpoint of this inefficiency right here. And so I'm leaving the stop under the low, and I'm okay with that and not jamming it up to break even because we've already taken a partial on the majority of the position. So even if the rest of the trade is stopped out, it's still a profitable trade. Sarah says, so I don't need to mark them all, but keep the stop loss below the lowest imbalance it could trade into. Yes, correct. You don't need to mark them all. The way I do it is I just mark whatever the highest time frame one was, which in this case is the 5 minute. So we're basing the trade off of this. And the original stop was placed off of that. And then when you go down into the lower time frames, you can see what new inefficiencies have been created. But I'm just being aware of them. I'm not really marking them. Arish says, one question. So we made a 5 minute fair value gap at 9:30 open on the 5 minute. Why wouldn't we look for an entry there? 9:30 open. Let me go to 5. Are you talking about NASDAQ or ES, Arish? ES. We didn't look for this because our intention was to wait for 10 a.m. news. So we wait for the news release right here. And then we see that that news was just manipulation because all you see is a wick dropping below sell side, but the bodies close inside the inefficiency. And so we say, okay, it was just manipulation below the low. We've seen sell side run a whole bunch of times over and over, and we get our 2022 model right there. Sell side purge, shift in market structure above the high, return to the fair value gap, enter long, reach for the buy side, and put your stop below the lowest inefficiency, so down here. All right, and now we're seeing that reach below the midpoint right there. So we are seeing that reversal off the high so far. Stop is still fine, but if you see closure below this midline right there, this will likely be stopped out on the rest. Okay, so it'd still be fine at the moment. Just a couple ticks off. See what's going on a 1 minute. So the rest of this trade would likely be stopped out there. And if you wanted, you could, after seeing that closure below right there on the 1 minute, you could cut the rest of the trade if you decide to do so. But remember, okay, so it's hit right there. You have your partial up here on that 70 to 80% of the position. So this is totally fine for the remainder of it to be stopped out. And of course, too, depending on your own trading style and your own management, you can be taking 100% of your trade at the first partial, totally fine. That's enough of a range to have a very nice trade. And if it suits your style as well, after you take the first partial and you prefer to move to break even, that's okay. You just have to be conscious of the fact that when you move to break even like that, you may not be allowing inefficiencies within the range to trade, and so you may be stopped out prematurely and the trade will continue to run in your direction. That's totally fine if that's what you've accounted for and it helps manage your emotions. If you say, okay, I've taken my first partial, I'm cool with getting stopped out at break even, then go ahead and do that. it protects you. You don't have to worry about giving back any of the profits that you've taken in the form of taking a stop loss on the remainder of the position. So that's totally cool if you prefer to manage that way. I'm just trying to communicate to you all how when the context of the range has already been traded through, like when we reach to this inefficiency here and then trade through the highs, you need to allow for new inefficiencies that have been created within this range to trade. So if you jam your stop loss up, price can trade into the inefficiency and then continue to work higher, and you may be stopped out prematurely. But here the likelihood is that we're seeing a reversal off the highs now, and the sell side will likely trade out of here. Because you need to keep in mind the fact that we are still on ES here inside the 4-hour SIBI. So we're keeping, while we can find a scalp opportunity, you need to keep the context of the higher time frame inefficiencies in mind. So now buy side's been traded above here, and this can continue to play out as we were expecting earlier in the day, with seeing a run down toward the sell side down here and potentially below this low if it digs deeper. But it's the day before NFP. This would call it a morning for me. We have two good opportunities, being that first long opportunity in here, and then we had the other one from here on ES and NASDAQ, and that would be enough to call it a day. Now you're seeing the return to this range, short opportunity from this inefficiency right here, and this should go attack the sell side below this low. Yep, Axel says pretty much what you'd expect from a day like today. Exactly. So, seek and destroy conditions for the most part. Buy side, sell side, buy side, sell side, back and forth. And that's kind of what we get on a day like today. And that's why it's not the best of days to be in the market. But I'll stay on a couple more minutes. If you have any questions, if you want to come on as a speaker, you're welcome to do so, or you can just leave a question in the chat. I'll answer any questions for a couple minutes, and then we will call it a day. And Carson's going to be leading a call tomorrow morning for NFP. I think he'll be on like a little bit before 8:30, and I think he said he's going to stay on till 11 or 11:30. Axel said, lots of trial and error to condition that out. Oh, replying to Sarah. Yeah, guilty of jamming the stop loss. Yeah, it's just something to work on over time. You journal it, see how you could do better in the next opportunity. And when you journal it, just journal the conditions that you associate with it too. So make sure you're noting what economic calendar events are surrounding that trade. Is it the day before a high impact news event? Is it the day of a high impact news event? You'll start to get an idea of how things shape up differently on different sorts of days and different conditions. And it just takes time. Go ahead, Mauricio. Are you looking at ES or NASDAQ? Okay. If this low hasn't already been purged, you may be able to find a short opportunity within here. Yep. If I took you could probably go there with it. I'd probably go a little bit higher personally to allow if the low end of this wanted to be treated as inversion. So I'd probably go above this candle body. But if this low is already purged, then I wouldn't have as much of interest in it. It could still work. But it wouldn't be as of much interest. It's better to leave it before it runs, or to return back to the inefficiency before it runs to liquidity, because we're focused on the context of that trade, and like your 5-minute context. If this has already been purged down here, then it's already purging the context of a higher time frame, being the 15-minute. Yeah, I mean, if you see it work back into here, there is a potential short opportunity to work off of there down to there, as long as it works within your risk. But just be aware of the 15-minute as well, because if you have another 15-minute candle, you don't have any inefficiency yet, but assuming the next 15-minute candle doesn't trade all the way up to this candle's low, you'll have a new SIBI forming here. Axel says, got stopped out at 0.5% of my trade I was playing with this morning. Initially, I risked 1%. Sometimes jamming a stop loss is a good thing, but it takes time and practice to discern what the best moments to do so is. So in the future, if you feel you did it wrong by not tightening the stop loss, just remember it takes a lot of work to get right. Yeah, it takes practice. It takes kind of understanding the conditions. And we're human. We're not perfect too. There's going to be times when we don't do it as well as we would have liked to, and that's okay. The intention is just that we're working toward finding profitability in the markets, and you don't have to be perfect to be profitable. You just need to work on doing the right things in terms of risk management and doing them consistently. And that's why we're doing things like taking partials, making sure we're getting paid on the trade, then looking for opportunities to where we can safely trail our stop to a better position or even to break even, and allow for runners to make a trade more profitable. All right, so we'll see if sell side does trade down here. And you can see how much of a seek and destroy day it's been so far. Running the sell side, running the buy side, running the sell side again. All right. And now you can see why it does make sense to work from the highest of time frames down to the lowest, because this was the original context introduced this morning, which was a short opportunity from the 4-hour SIBI down to this low. And so you may find lower time frame opportunities to go higher, but this is why we were only reaching for the buy side above this high and potentially the high end of the 4-hour as targets, is because we were inside of a higher time frame area that was likely to move price lower. And so now we'll see ES likely trade to the sell side below this candle's low, and then it can work toward this low next. All right, well, it's 11 now. I'm going to go ahead and call it a day here. Any last questions from anyone? I hope this was a good stream for you this morning. I hope you found some insights in it. I hope you liked the tape read of the first trade. Learned a bit about risk management, stop management, that sort of thing. 4 streams this week. 4 streams. Thanks, everyone. All right. Sarah, Bob, Ranjan, Axel, Arish, Tiago, Aiden, Kate. Thanks, everyone. Rosemary, thank you. All right, good. All right. Glad it was insightful. We can continue looking for the south side down here for now. But have a good rest of your day. Be safe. Be responsible. No need to engage the rest of the day. Just focus on tape reading, learning, journaling. And Carson will be leading a stream tomorrow morning. So get ready. Be excited for that. It'll be his first stream in the Discord. And I will see y'all in commentary. Feel free to tag me if you need anything. Talk soon.